Alright, what going on, people? You don't know Mark Fagan here coming at you once again. Alright, so yo, check me out. Saying, um, I've been dropping a lot of narrative videos lately. Um, and these narrative videos are designed to help you with your trading in terms of what to look out for before something is happening, right? What to look out before price reverse, what to look out for to tell you that the zone is not going to hold, right? Once again, these things come off of DTFX trading concepts. I did not make these concepts up. It's all DTFX, right? So once again, you need to, when you're using this narrative, always use it with structure. Always use it with structure, right? When I mean structure, I mean the swing count, highs and lows. If you don't know structure, I got videos that will explain structure in concise detail. All right. So what I want to talk to you about is my go-to narrative, right? This is the narrative that I practice a lot. This is the narrative that I use in my trades a lot, right? This is out of all the narratives, this is the narratives that I have the most faith in. Reason is because out of all the narratives, I chose to double down on this one, right? You're not expected to know all the narratives, but find one narrative that you like and run it red. And then you will realize that all of the narratives tie together, but you have to start with one, right? So the narrative that I'm talking about is this narrative here, right? You have this zone, right? You have this high, low, this swing, right? And you know, this is inside of the swing, you have the zone left behind, right? Now inside of the swing, you have small little baby swings. I wouldn't say baby swings, but smaller time frame swings. And just before you break this high right here, just before you run past it, there's this zone here. Let me change the color. There's this zone here that is very important, right? Very important. First of all, this zone is a target. And what I mean by a target is something that when price goes towards it and runs it, it trade the other way. Like price is actively seeking it to run it out, right? It's just a target. Now, the fact that it's a target is very good because you can use this target. So, for example, if you're in this trade coming down, you will know, okay, I have until here to get out of the trade, right? That is very good because sometimes when we're in trades, we get nervous and we're like, all right, you don't know how long this is going to last. So guess what? We exit the trade. Some people exit the trade just here. Them just start to profit. And because of the fear and the losses in the past, them exit the trade and leave a whole bunch of money on the table. Some people just plain out greedy and them want to see the thing come all the way down. And then they don't know that, okay, price is just targeting here to what? Go the other way. So sometimes you will see price come down here. Sometimes it will tap in here and go, right? That's why I said target the top. But most times it'll run this, right? And then it'll trade the other way. And sometimes it'll put in a new high, or sometimes what it will do is it will put in a weak high, and that will give you a signal. Okay, if it's putting in a weak high, then it's going to run the low and then go higher, right? And usually it lands in the 50% when it's doing things like this, right? But this is basically the first imbalance that puts in a new high. That's a concept from DTFX. I would go and look at the first imbalance putting in a new high a lot of times on the chart so you can kind of like understand what's going on. Right here, look, see, first imbalance put in a new low, right? First imbalance right here, price tap the first imbalance. Look, this is imbalance, price trade up, tap it, put in a new low. The same thing is on the flip side. Right, but if it don't put in a new high or a new low, it's going the other way. All right, so I'm going to show you how this thing look on the chart before we get too deep into it. This is an hourly chart, so one candlestick represents 1 hour, right? I just want to do this for ease, so I can find what I want to find easier. Because a 1 minute chart them is, sometimes you have to look on them long time before you kind of. Anyway, so we'll have this zone, right? And we'll have this last down move that ran the high, right? And price ran it, trade the other way. So if I was in this trade coming down, I would know, okay, when to stop. But more importantly, or more precisely, this big zone right here, this big zone is really, you can really break it down to this smaller zone here, this wick, right? This wick is really the zone that ran the high, because this, for those who don't know candlesticks, price stop here, price opened here, traded down, then traded up, traded down a little bit and stop. So price open, trade down, trade up, trade down a little bit and stop, and then this is the zone left behind. So if this is the last week that put in this full imbalance, and what I said, first imbalance put in a new high, but if it doesn't put in a new high, it's coming down for some more stuff, right? So that's the narrative. See, it run this low, trade it up, and usually, guys, when it's trading in the direction after it's run, it's usually looking for an unmitigated zone. So this zone was already mitigated, right? So what? It go down into a zone that is what? Already mitigated. That's not mitigated, and then you see it go up. Now, once again, this is all swing count. Look, 1, 2, 3, 4, right? I guess you can say 4 swings. First imbalance, put in a new high. You see, the first imbalance, the first imbalance puts in a new high. And then when the imbalance failed to put in a new high, it put in a new low, right? Let's look other places. Oh, on the flip side, look, you can even see it on the other opposite side right here. Watch this. Watch this. The last zone to run this low, right? The last zone to run this low. So you find the last zone. What was the last zone to run this low? Somewhere around here. A little bit clustered, but you can say this is the last zone, right? This up move come down, price trade above it, wick, tap into this imbalance. What's this? The first imbalance puts in a new low. See it? All right. Notice you don't see here, this is one long imbalance. But anyway, where else can we see this? We can see it all over the chart, really. Look at this swing here. This down move. This is the last down move to run this high. Price run it, right? Wait until the momentum change. Remember the rounding that we talked about? Where is it targeting? Where is it targeting? This is a target. The last, remember the wick that ran this high? Price trade above it, trade the other way. Right? Just like how it run this, trade the other way. But remember I said you have to use it with structure. Where are you in structure? You're at the top of some range or whatever. Right? We don't know what's here. But just by looking at this, and this, you're at the top of this. So you wouldn't be necessarily looking for them serious type of reversals, right? But you can see it all over the map. Look at this here. This up move, come down, price. You have a little zone up in here, right? Price run it, trade in the unmitigated zone, you get a reaction down. Right? It's all over the map. See another one here. Oops. See another one here. This low, put in this high. This low got ran. Price trading up. So price trading up, I'm like, man, we don't even really know where price is going, right? We don't know where price is going. This is the, let's draw the line here. Draw the line there. Bam. So we say, all right, we know for sure price is going to run this last. This is not it. This could be it, maybe. This could be it. This here. Because this is the start of. It didn't run it here. It didn't run it here. This is the protected high. This up move, eventually, they get run here. Price trade up, trade down, run it. Now, I'm not going to tell you, like, if you find it hard to find the zone, then don't just watch price run some, just watch price change direction. Don't try and force it. Don't try and force the narrative. All right. Look at this one here. This down move like that. Price run this. This is the down move. This down candle. Maybe not. No. Sometimes it's not. If it's not the zone. If it's not the zone. This is what I want to tell you. If it's not the zone directly involved in running the high, and you see the zone, like you don't see the zone, it's usually near the high, slightly above the high, but it's here, right? It's there. This here, right? Price broke it, traded up, right? Why? Because it treated like the first imbalance to put in a new high. No, it did not put in a new high. So guess what? It went further down and tapped into this imbalance down here. And this big ugly imbalance put in the high above. Right? Let's look for some more examples. Do we see any here? Price don't come feet yet. This down move. When price come feet, it's going to get a reaction. This down move here that run this, price trade through it, you get a reaction, right? Really probably telling you the first imbalance put in a new high, right? Then it trade down, something like that. When it's probably from here, then you have to keep your time frames in mind. The first imbalance put in a new high, and it trade down again, put in another high. But you can see where it run here and it give you a reaction. Where else? This up move here, the first the zone that was responsible for the break get run, trade the other way. You can see it on the big zones, the small zones, the baby zones. It's just here. Look at this one. See this zone here? What's the last, this down move, what's the last zone to run this low? I'm saying this, probably this one here. Because price trade up and run through. Price run it. Then trade into some unmitigated zone just above it. Probably break it, yeah, because you have the imbalance right there. And then guess what happened? Run it down. Alright, just like this. We say, okay, where is price going, man? Where is price going? Price trade up, price run this high. Guess what? You can get a nice trade down. Price run the high, you get a nice trade down. Right? We use it with structure because we don't know what this I do. But you use it with structure because this like, look, alright. This here is the ranging that occurs when you run the high, right? So obviously we're going to see some ranging. But inside here is a lot of opportunity to scalp if you know this narrative. Look at this zone here. Look at this zone here. Right? Price trade up. This is the last zone responsible for running this low. Price trade up. Right? You get a nice little push down. You got, remember, these are hourly candles, guys. Right? These are hourly candles. So there's a lot of money in here. Price trade above it, trade down, right? And then trade, go about it business, right? So there's a lot of opportunity in here, right? A lot of opportunity. Now, sometimes you're not going to see the zone, right? Like this one here, but just look for it. They're all over. It's all over the map. All over the map. Look at this price. This down move responsible for running this high right here. You can even say this is the down move responsible for running the high. Price trade below it, and guess what? Trade in the other direction, gone up. Right? Look at this one. Price trade coming up. Right? Price come so the last up move. We know that price eventually coming for these guys, because like this one here, this is probably the last, sorry, this is the last, this is the actual zone here, right? Prioritize the larger zone, guys, right? And then this is the last move that ran the low. So you look and you see where price tend to kind of, look like it going the other way, and then you run it. You can get faked out like that too. Don't get it twisted. All right. You got this other zone here. As I said, use it as a means to know where price is going. So you see this, price is on its way up. You know that price is looking to take something. Right, so once price grab what it needed to grab, it grabbed it, trade down, didn't close, trade higher. What's higher? You have an unmitigated zone up here at the top of the range. Trade down. All right, let me see if we have any more. Nope. No, not yet. But it's all over the map, guys. I'm telling you, this thing is all over the map. This is the last down move that trade up, or you can say this is the last down move. Price destroyed it and then trade the other way. Right? All over the map. Let me see. What's this? Nah. Last down move before running the high. Somewhere over here. Price trade down to it. Continue going where it go. Right? Same as right here. You have this zone here. This is the candle that responsible for running the high, because if you look, this is just a wick. So this down move traded beyond this wick, and look, price ran it and give you a pump flying the other way. All right. Let's see else where we can find it. Can't really find it nowhere else. This is obviously a huge imbalance. Price trade up to it, trade down. You probably won't see it. You'll see it a lot on the lower time frames where everything is nice and wicky. Look at this one right here. What's responsible for running this low, giving you this candle, this high? Price trade up and trade through everything right here. Price on its way up, price is going to run it. And then you have an unmitigated zone. And just coincidentally, watch it, not the 50%, right? You get a scalp down. I don't see price running anything else. Yeah, that's pretty much it. This down move, run this high, price run this, trade up the other way. So it's up to you to look for this narrative and learn it. And if you're interested in it, then use it. Right? This down move was responsible for running this. So if I'm in a trade, like I see the rounding and I'm like, yeah, I am stopping here. This is a plenty food for me. Right? There is no unmitigated zone here. And once again, you see, use it with structure. Use it with structure, right? You know that this, price bullish. Just use it with structure, right? Look at this one here also. You have this down move come up. This down move come up. It's imbalance. But yeah, on the lower time frames, it's visible. It's more like you see more opportunity. This low, this down move, trade up. What was the last down move to cause this to trade up? This one here, break it, you trade the other way. So yeah, so that's sufficient examples for you guys. Make sure you back test it and see where you can use it to get into price. All right, cool, peace.